What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market, we did get the bullish breakout across the indices as the bulls are now pushing to close the gaps above. Now that we have the bullish breakout, where are we going from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, happy Bear Trap Tuesday as the bulls pushed up 2.7% and sliced right through that very critical resistance zone, which was right there at SPY 390. So this is a very significant breakthrough in the price action because we now have a bull trend of higher lows and higher highs as the bulls are slicing through resistance, and the bulls did it on increasing volume. Remember, just yesterday I was talking about how this was a bear trap on Monday, and a lot of you seemed to disagree that that was a bear trap and actually thought it was a bull trap, but now you can clearly see why it was a bear trap, and I did explain all of the reasons in yesterday's video why that was a bear trap, so you should have seen it coming if you were paying attention. So with the bear trap now complete, the bulls are fully ready to go battle the bear, because now the bulls are going to be bringing a short squeezing rally to help slice through resistance as bears are covering their positions, becoming net buyers and actually going long in the market, which will lead to a very impulsive rally that could start to push through very critical resistance with a lot less effort from the bulls. Remember, the bulls were consolidating and building up a battle plan on how to go battle this bear for over 2 months of sideways consolidation, and the bulls continued to do everything they needed to do with the price action and developing the bullish chart to build the market structure required to build a bull trend. So that's all history now, and the bulls have succeeded in that plan, and they are now getting ready to go close the gap above on SPY 401. So the next critical resistance will be that gap fill at 401 and the 50 EMA, which is right around 394. So keep in mind the bull breakout above 390 is already going to start triggering some shorts who set their stop loss just below the breakout. And now that we're getting the breakout, we are going to start seeing a short covering rally, which should help us push to go close the gap at 401. And more than likely, the bulls do have enough energy to push through that gap and send SPY all the way back up to about 418. So keep in mind, if you are shorting this market, you are going against a bull trend now, and you do need to understand these very critical levels just above, which are going to be SPY 394 and SPY 401. Above 401, it's nearly blue skies all the way back up to 418. So pay attention to the breakout levels and understand that you are setting a risk at resistance if you are trying to short this rally. Now, as a bull, you had a risk level down here at 380 and you were supposed to be staying long while we were above 380. And now that we're above 390, I would up your risk level from 380 up to 390. That allows you to lock in profits if we do start to close below support, and it allows you to move your risk levels up as the bulls continue to push higher. So the critical support for you bulls is now here at 390, and you will want to get a lot more cautious if we do lose this support zone, because if this is going to be the real deal breakout, we should see the bulls pushing and never looking back. If we do lose support at 390, you will want to watch the support trend line, which is going to be right around 385 to 386. And then of course, we still do have the support down there at 380. Below 380, it is not looking bullish, and it is likely that we're going for that next leg lower. But so far in the short term, things are stacking up for the bulls' favor, and you'll see it even more so when we get over to the NASDAQ 100 triple Qs. So pay attention, going up on increasing volume while slicing through resistance is definitely a bullish breakout, and we also did get the breakout above that resistance trend line. So we have a few more days in the week left to see if we can close at these breakout levels, and if we do, we are very likely going to see some type of sustainable bull rally. On the NASDAQ 100 triple Qs, you can see a lot more why the market is looking so bullish, with the triple Qs going up over 3% today and slicing through that very critical resistance zone right around 297, which is our breakout level of the previous high and our 50 EMA. Now remember, the tech sector already had the bullish breakout from the resistance trend line. We already back tested that level as support and got the confirmation of the bounce. So without a doubt, the tech sector is leading the way during this bull rally and helping push the market higher. When the tech sector is leading the way higher, it is very likely that it is going to be the real deal, because the tech sector has a lot of weight by market cap in the S&P 500. So with the triple Qs leading the way higher, it's very likely this is going to be the real deal breakout, and it is very unlikely that the bear down here right around 299 is going to survive this battle. So he is likely going to retreat to the previous high right around 315. So I do think it's very likely the triple Qs are going to start marching up to that next leg higher, as long as the triple Qs bulls can hold this breakout look above about 296. If the bulls cannot hold above 296, that does mean the trend is not likely as strong as the breakout, which could mean this is a false breakout look. But another day of confirmation closing above 296 should confirm this is the real deal breakout and that we're going to start marching higher from here. So as triple Qs bulls, you'll want to use this risk level at 296 because that is your best defined risk of the breakout. And if we break down below 296, we could come all the way back down to about 288 to 289. As long as we're above this positively sloping 20 simple moving average, I think it is very likely the bulls have the full advantage of the price action and the trend, now having higher lows and the higher high, which is exactly how every single bull trend begins. So without a doubt, the bulls have the bull trend in the short term, and they are not going to give away that bull trend without a very significant battle. And it is very likely that the bulls are going to recruit a lot of those bears that were too ambitious on shorting, and they are now going to get short squeezed through resistance. So look for these events to unfold through the price action this week because you are very likely going to see this rally getting a lot more impulsive as we get the short squeeze rally. In the Dow Jones, we were up 2.4% as the Dow Jones also got the bullish breakout on increasing volume and closed back over the 50 EMA, and we did get the bull breakout above the resistance trendline. And just like the rest of the indices, we do have a positively sloping 20 simple moving average that we did successfully bounce from. So there's no way you can look at price action and trend and being objective say that this is not a bullish breakout. So you will want to get a lot more bullish while the Dow Jones is above this breakout level at 313. And we are very likely going to start trending up there to fill the gap at 323. And above that gap fill, retest the previous high at 333. So as long as the Dow Jones is above this critical support right around 311 to 313, you will want to stay bullish of this bullish breakout look. But if we do lose that support, it will look like a false breakout and will very likely start going down to close the gap at 307. In the Russell 2000 IWM ETF, we were up over 3.5%, and the IWM came all the way back up to the resistance trendline right around 179 and did close back over the 50 EMA after a strong breakout above that resistance at 175. So you can see a common theme in the indices that we are getting bullish breakouts and developing a lot of bullish momentum with all of these moving averages starting to go into positive slopes, so the bulls will use that to their advantage. The bull breakout in IWM will be above 179 to go close the gap at 183.5. So look for that next price target on the bull breakout above 179. Critical support is down here at 175 and right around 173, which is our positively sloping 20 simple moving average. On the ARK ETF, we were up 4.16% as we did bounce off of that positively sloping 20 simple moving average and close back over the 50 EMA. It is very likely that the ARK ETF is also going to get the bullish breakout, which will require the close back over 47. So with that bullish breakout, this is going to look like an inverse head and shoulders, which means we should easily get back up into the 50s, with that next critical resistance being at 52. Stay bullish as long as we're above 42, which is our positively sloping support trendline, and our positively sloping 20 simple moving average is going to be right around 44. On the VIX, we were down 3.28% as the VIX is continuing into that bear trend with all of the moving averages now in a bear trend. And as you know, the VIX is inversely related to the S&P 500. So if the VIX is in a bear trend, that goes hand in hand with our S&P 500 going into a bull trend. The next bullish breakout in the VIX will be the crush down below 24 as the VIX starts trending down towards 20. But do be cautious because historically the VIX has been bouncing off of 24 as support, and we have still not seen the VIX slice down through that level. So if you're holding on to any bearish hopes, it's that the VIX will not break down below 24, so watch that level very closely. The next volatile leg lower in the bear market will require the VIX to spike out back above 27, so look for that as another possible scenario if we do see VIX starting to spike higher. On Bitcoin, we're currently up 4.7% as Bitcoin is breaking out on increasing volume through that very critical resistance zone at 22,000, which means Bitcoin is very likely well on its way to retest resistance at 25,000 and then 28,000. As long as Bitcoin is above 22,000, you want to stay on the bull because we are likely going all the way back up to at least 30,000 in the event we get the bull trend, which will require Bitcoin to get consecutive closes back above 23,000. So everything is looking bullish from this double bottom breakout in Bitcoin as long as we're above 22,000. So stay bullish on Bitcoin at this time as long as we're seeing high volume buying on the breakout. On Nvidia stock, we were up over 5.5% today as we expected from yesterday because we did see that high volume breakout, which is clearly telling us that Nvidia is getting ready to go back into a bull trend. So we now see Nvidia has the higher low and the higher high and coming into some critical resistance right around 172. And if we break above 172, we'll very likely go close the gap just above 180. Stay bullish on Nvidia while it's above 161. And if we lose that support at 161, look out for that gap fill just below right around 157.8. You can clearly see it looks like Nvidia is developing a base of support right around the 150s, and now we're getting the bullish breakout above resistance and starting to build that bull trend. So you will want to be a lot more bullish on Nvidia while it's trading above 161 because we are getting the breakout on increasing volume. On Tesla stock, we were up 2.07% as Tesla continues to close above $700, but still has not yet had the bullish breakout above about 743. Tesla breaking above 743 should send us back into a bull trend as we break out, get the higher low, higher high bull trend, and then we'll have critical resistance at 775, 798, and 828. If we start breaking back down below 700, that means we're getting rejected from resistance and we could be coming back down to the bottom of the consolidation wedge around 660. But so far, it looks like the Tesla bulls are getting very strong going into earnings. And as I always tell you, I do not suggest gambling through earnings because it's always going to be a coin flip. Stocks can go up on bad earnings and can go down on good earnings. So I really don't suggest gambling through earnings, even though in the short term, it still looks like we're consolidating. So you will want to wait for a confirmation of a breakout to the upside or a breakdown to the downside. On Apple stock, we were up 2.67% as Apple continues to go higher on very nice volume, and we did close above that resistance at 150. So we are getting the bullish breakout without building out that right shoulder. Remember, there was a possibility of an inverse head and shoulders, but in the most bullish scenario, Apple is going straight to 156 without looking back. And so far, it looks like we are getting the most bullish scenario. Stay bullish on Apple as long as it's above 146 and about 143. And if we lose those two support zones, there could be something else occurring and we could be seeing Apple heading lower. But right now, all signs point to the bullish price action with the bull trend in Apple stock. And if Apple is a market moving stock and it's looking bullish, we are likely going to see the rest of the market heading higher as well. On the financial sector, we were up 3% after we got the strong bounce off of this triple bottom look, and we are starting to break back above the neckline. So it does look like the financial sector could start rallying to close the gap above. The industrial sector was up 3.57% today with a very bullish candle, closing near the high of the day and getting a very bullish engulfing candle. So it does look like the industrials are getting ready to power through resistance and go close the gaps above. The healthcare sector was up 1.7% today, and the bulls did everything they needed to do, bouncing off of that support trendline breakout, closing back over all of the moving averages and establishing a bull trend yet again. So it does look like the healthcare sector could be finishing out this inverse head and shoulders and getting ready to get the bullish breakout. The energy sector was up over 3% today, breaking back above $70 and closing back over the 20 simple moving average. And it does look like the energy sector is going to attempt to break out back over the 50 EMA, which is just below $76. So jumping back over to the S&P 500, we are getting the bullish breakout on increasing volume after the bear trap. So we will likely start to see a short squeeze rally to go battle the big bear at resistance. So be prepared because we now have the confirmation of the bullish breakout above 390. Obviously, there's always the possibility of a false breakout. So the second day of confirmation above 390 will confirm the breakout. So pay attention to tomorrow's price action, and as long as SPY is above 390, you need to stay bullish. Remember, as bulls, use that as your risk level because as we continue to break out, you will want to up your risk level so that if we do break down through support, you are locking in some of your profits. And do keep in mind, in the short term, we do now have the bull trend with the confirmed bullish breakout. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.